Welcome to Tax Insights, presented by Hawkins Ash CPAs.
And a good morning, listeners. Welcome back to Tax Insight here on WOMT each and every week with Jeff from Hawkins Ash. Jeff, good morning, sir.
Good morning, Terry.
How are you?
I'm doing well.
Well, that's good. Today on the program, we're talking about estimated taxes and the penalties.
Right. So, we've talked in the past about cash flow kind of being the number one thing that can bring down a small business. And as a business grows, cash flow really can become an issue. But also as the business grows, so does the potential tax bill that can show up at the end of the year. So today, I want to talk about how businesses can pay their taxes and things like that. And it might be different here a little bit in 2021. So let's talk about estimated tax payments.
So I know that we've talked about estimated tax payments in the past, but just give us a little refresher.
Sure. For most of us, as an employee, there's taxes that are being taken off of our paychecks, but businesses don't have taxes withheld off their income. So they have to do that calculation manually. These taxes are then paid in on a quarterly basis, generally in April, June, very familiar right now, September, January of each year. So guess what? That June payment is going to be due here very soon on the 15th.
Absolutely. So how are these payments actually calculated?
So for most businesses, it's calculated based off of last year's income. And the IRS does this to be in what they call the safe harbor. And the safe harbor, it says that, if the business pays in at least, 90% of the current year tax or 100% of the prior year tax in most cases, that that's all they really need to pay in. But if they don't pay in enough, the IRS can charge them an interest penalty.
So what happens when a business had, let's say, low income in 2020 because of the pandemic, but this year their income is going to be substantially higher?
This is really what I wanted to talk about, because this is a potential problem. So let's say exactly in your scenario that in 2020, the business income was low. And so then, based off of what we said before, they could use safe harbor and just pay in lower estimated taxes. If all of a sudden the business income goes up in 2020, and then, tax is going to be owed by that taxpayer at the end of the year. Now, in this case, there won't be any penalties, but that additional tax can really pose a cash flow problem if the business is not ready for it.
Absolutely. So what should a business do to prepare for this?
If they've done everything else that they can with buying equipment or doing bonuses or everything else that we've kind of recommended over the years, the company can actually pay their estimates like they were set up, but they should also put some money on the side knowing that they're going to need that money for the year-end tax bill. Or, say, they can't pay, or let's say that they just go ahead and they pay more than the minimum amount. So, if their income is doubled, they can actually make a larger payment than they're otherwise required to, and that'll also make it easier come April 15th of the next year.
So if they don't do either of these, what would happen when they file their return?
So normally, it's a surprise to the businesses that they might not be ready for. So it's a double-edged sword because, they're going to owe tax for the current year since their estimates were based off of last year's lower income. But here's where the big surprise comes in. Not only are they going to owe tax for last year, but they're also going to owe a first quarter estimate. And that first quarter estimate is going to be based off of this year's income. And both payments are due at the same time, normally April 15th. So April 15th can be a huge tax, cash crunch to businesses if they're not planning for it.
Absolutely, which is why they need a team of experts like Hawkins Ash around them so that they're ready for situations like this. What is the best way, Jeff, for listeners to connect with the team at Hawkins Ash?
I would go to our website, which is hawkinsashcpas.com, or follow us on Twitter, or even like us on Facebook.
Jeff, thank you for your time, and we'll talk to you next week here on Tax Insight.
This has been Tax Insights, presented by Hawkins Ash CPAs. Learn more online at hawkinsashcpas.com. Hawkins Ash CPAs, part of your business, part of your life.